So thank you everybody for coming to our webinar. My name is Philip Tai, Investor Relations Specialist from Blue Pearl Mortgage Investment Corp. Today we will be talking about our mortgage investment corporation and providing information to help you understand if our investment opportunity is suitable for your portfolio. I'll be giving a 15-minute presentation on the details about our mortgage investment corporation that will include our returns, risk management strategies, and some market comparables. But before that, I'd like to introduce you to the president of Blue Pearl Mortgage Group, Hitesh Prakash, who will be giving you a better understanding about our group of companies. Hitesh?
Well, thank you for that introduction. Thank you for joining us for this call, this webinar today. Blue Pearl Mortgage Group is a group of different companies. It's not specifically a mortgage investment corporation. That is one of our arms. Our main company is our mortgage brokerage, which operates across Canada. We started this brokerage in 2014, so we're on our 10th year now. We're heading, and over the years we built different verticals. The Mortgage Investment Corporation being one of them. So 2014 we launched Blue Pearl Mortgage Group. 2017, we saw a need from an investment for our clients and our friends and family that were looking for opportunities where they can invest in some of these mortgages. So we started Blue Pearl Mortgage Investment Corporation. In 2019, we launched Blue Pearl Insurance. And in 2020, we launched our Blue Pearl Quick Loans Company. So we have a few different verticals that we have operated, and it's kind of like an ecosystem of opportunities between the different companies. And so I think that they all complement each other very well. And so that's really kind of the history. So we started with the mortgage broker started with just five of us, and I think we're just under 50 right now. And so it's grown significantly over the years. And really how the MIC side came apart was the mortgage. So MIC, Mortgage Investment Corporation, in case you hear me say that, is really, we service that type of client. We're looking for people that need help through a specific situation. And so that whether it be income taxes owing or credit maybe poor, we can do a couple of things to help them fix these problems and then really exit out of that type of loan, right? So we don't have any borrowers that have been with us for years. Usually I try to do a 6 months to a 1 year term, come in, figure out what the problem is, solve the problem, and then move the client out of that situation. The worst thing I could do is put a client in a loan like this for a long period of time, and that's not what our intention is. So we think that we could figure out a way to really put a band-aid on the situation, fix it, heal the problem, and then move it to a more traditional lending. So, and this has served us really well since 2017 when we launched the fund. But like I said, it fits really well with us, and why this fits really well as well is because typically a mortgage investment corporation will get the clients that they get by referral through mortgage brokers. And so mortgage brokers will see a problem for a client and they'll look for a way to solve this problem. So they'll go to a MIC. And for us, we don't take any referrals from outside mortgage brokers. The only referrals we take are from our staff under our roof. And so knowing the client like that is a very unique opportunity for us, because if there's a problem with the client, we can just talk to our employee that knows this client and help solve this problem rather than going through a collections route or foreclosure type situation, which most other mortgage investment corporations have to do or have like large departments to try to facilitate those things. And for us, it's that relationship that we have with that client and being able to solve that problem for them. And that's really kind of what's worked for us and how it's continued to be successful. And so, we have done really well that way. And we're fixing a lot of problems for people. And I think that that part's the most important. Blue Pearl on its own as an organization, I would just say is think about us as people that are looking for a way to find a client that has a problem and then looking to solve their problem through all of the different verticals that we have, or the means, all the different companies that we have available. And it's kind of a one-stop shop for all of our clients. And I think that it's an opportunity for someone to get in to an organization where they can serve them in so many different ways. And so that is our objective, is to serve as many clients as we can and to find different ways to offer great returns for our investors. And I'll just add one last thing before I hand it back to you, Philip. Is in 2017 when we launched, our very first investor was my grandmother. She put 200,000 in when she first started. She passed away a couple of years ago, but I want to mention that she was one of our first investors, and so we always treated grandma's money with carefully. And so myself, a lot of our employees are invested as well. So I think that's something that should be notable, that grandma's money is still in there, even though it's been passed down the line. But that's how we treat everything we do here. So back to you, Phil.
Thank you very much, Nitesh, for giving a lot of color on what we do here at Blue Pearl Mortgage Group. I'm just going to put up the presentation now and share that with our audience here. Right, so everyone can see that. As a division of Blue Pearl Mortgage Group, Blue Pearl Mortgage Investment Corporation is offering to investors a chance to take advantage of the excellent returns that our mortgage lending can provide. I'd like to call to your attention our recent accolades, including winning the 2023 Canadian Mortgage Awards for Excellence, being recognized as a 2023 CMP 5-star mortgage employer, and being named a 2023 Canadian Mortgage Awards winner. These achievements reflect our commitment to the excellence in the mortgage industry. Now, before we begin, we are required to provide this disclaimer. Please note that this presentation is for informational purposes only. It is not intended to provide financial, legal, accounting, or tax advice. No security regulatory authority has reviewed or assessed the merits of these securities or the information presented here. This overview is a summary and does not constitute an offer to sell or solicit purchases. And we strongly recommend our potential investors conduct their own due diligence before making any investment decisions. Thank you. So again, a summary of our business. Blue Pearl Mortgage Investment Corporation is a non-bank lender founded in 2017, as Nitesh said, and specializes in providing strong returns for our investors. Over the past 5 years, we delivered an average yield of 9.9% per year. As of July 2024, we have approximately $3.5 million in assets under management. Our opportunity is eligible for RSP, TFSA, and other registered accounts. Our mortgages have thus far been servicing clients in BC, but as we grow, that may change. One important thing to note as well is that since our inception, we've had 0 foreclosures in our portfolio, and that really speaks to how we source our mortgages through our own in-house brokerage team. So let's start with an overview of the Mortgage Investment Corporation, or MIC, as we call them, and how they function. The primary purpose of a MIC is to pool funds from investors to provide mortgages, primarily to residential borrowers. By doing so, we generate returns through interest payments and fees on these mortgages, and then we channel these returns to our investors. This allows investors to participate in the real estate market and earn returns without directly owning property or managing loans themselves. So MICs operate as flow-through entities, meaning they distribute all net income to investors. This structure is designed to minimize tax liability and also maximize returns, and typically investors can manage their tax burden through their own registered accounts, like TFSAs and RRSPs. We are governed by the Income Tax Act of Canada, and we report to the BC Financial Services Authority and Canadian Securities Commissions. One of the significant advantages of investing in MICs is the potential for consistent and often higher returns compared to traditional fixed income investments. These returns are typically paid out monthly or quarterly. Ours is monthly, providing steady income streams. And also, if you choose to drip the investment, you will have compounding interest on a monthly basis. MICs provide a degree of diversification, spreading risk across various borrowers and property types. And in summary, MICs offer a unique investment opportunity to investors who want high returns are secured by diversified residential real estate assets. To highlight how MICs work in greater detail, we have this chart. Investors, the top of this chart, provide capital to the MIC, in this case, us, Blue Pearl. The MIC then lends the capital to the mortgage markets, and the profits from the mortgages get passed back to investors. Through this process, we will work with banks, potentially to provide credit facilities to assist us in managing liquidity. Likewise, the MIC as managers may take fees for its services. Because we are in growth mode for our MIC, we have waived taking management fees for the past few years. Let's take a quick look at the current landscape of MICs in Canada. Firstly, there are over 200 MICs operating across the country, reflecting a robust and growing sector. Collectively, these MICs managed over $10 billion in assets under management, showcasing the significant role they play in the Canadian financial ecosystem. There are both public listed and privately held MICs available, offering a range of investment opportunities for different types of investors. Publicly listed MICs provide the benefit of liquidity, while privately held MICs can offer more specialized investment strategies. Mortgage investment corporations service nearly all regions of Canada, providing a vital mortgage financing option across urban and rural areas alike. So why now? Why should you consider a mortgage investment corporation at this point? In our view, now is an excellent time to invest in MICs. A couple of compelling reasons. Firstly, the stock market, especially Canadian markets, are experiencing significant fluctuations and uncertainty. MICs offer a more stable and predictable income, and this stability is particularly attractive in times of economic uncertainty. On the opposite side of things, MICs typically provide higher yields compared to traditional fixed income investments such as bonds and GICs. With interest rates remaining relatively low, the higher returns for MICs become even more appealing. Lastly, investment directly in real estate is more difficult than ever. Mortgage stress tests and high interest rates are limiting options for investors. Our opportunity helps investors get around that and benefit from returns tied to real estate. Let me share the key value propositions that set Blue Pearl Mortgage Investment Corporation apart. Firstly, Blue Pearl is uniquely positioned because of our parent business, Blue Pearl Mortgage Group, a well-established mortgage brokerage. This synergy allows us to source mortgages through our own brokerage arm rather than relying on external brokers like other MICs do. This creates better relationships with our trusted clients and enhance our ability to secure high-quality mortgages. Because of this, we've been able to gross returns ranging from 9.64% to 10.54%, which is competitive with the larger MICs in the market, but we are averaging 40% loan-to-value ratio in our portfolio, while other MICs have reported 70%, sometimes 80% average loan-to-value ratio, meaning that we bear significantly less risk in our portfolio. And I'll cover that a little bit in the next slide as well. Let's take a closer look at the makeup of our mortgage portfolio at Blue Pearl Mortgage Investment Corporation. Firstly, our average loan-to-value, as I said, is 40%. This is conservative. This is a conservative approach, meaning that we lend only that amount for the property's value, which reduces risk and ensures that we have a strong cushion in case of market fluctuations. To add to this, if there are issues with the mortgage client and payments, these clients have a lot of equity in their homes to allow us to refinance and avoid foreclosures. In terms of the types of mortgages we hold, 90% of our portfolio consists of second mortgages. 5% of our portfolio are allocated to first mortgages. Another 5% is dedicated to third mortgages. 100% of our portfolio is residential real estate, and 100% is, again, sourced in-house by our brokerage team. Now, in terms of the deal types that we prefer, or our typical mortgages, we prefer loans for secondary properties, short-term bridge financings, refinancing solutions, debt consolidations with a clear exit to the bank, and conservative loan-to-value ratios. We typically reject the following types of mortgages, which our brokers would then try to place with other lenders. These are high-risk loans, construction or development loans, distressed mortgages, high loan-to-value ratios. Our return history has been relatively stable for the last 5 years, averaging between 9.14% in 2023, and up to 10.54% in 2019. We expect our returns to maintain at this level moving forward. So let's take a look at our rate of return compared to other options in the market. In green, this is our rate of return for Blue Pearl, and it's averaging around 9.9% per year. The Canada 10-year bond rate, which is in the bright red, was at 3.11% in 2023. And the CIBC monthly income class A, which is a mutual fund that holds mainly Canadian blue chip stocks and tracks the Canadian stock markets, provided 8.14% in 2023. But if you look at the year prior, they only averaged about they actually had a loss of minus 10.8%. Likewise, if you look at the stock options here, the TSX Venture Composite Index and the TSX Composite Index, you see wild swings during this period of 5 years. What does that mean for your portfolio? Let's say you invested $25,000 in 2018 in each of these products. If you had invested in the Blue Pearl MIC based on our historical returns, your investment would have grown to $41,071. See this in the green here. If you invested in the TSX Venture Market, you would have lost money and have $24,000 today. You can see. If you invested in the Canada 10-year bond, you would have returned $27,000 in 5 years. In the bright red here. The CIBC monthly income class A would have returned $33,000. You can see some losses in certain years. The TSX Composite Index would have returned $40,300, but you would have had to bear the risk of market volatility in the 5 years. And as you can see, you would have lost money if you sold at certain points. Now, I want to go over our strategy for the next 12 months. The main goal will be to grow our assets under management to $10 million. Then we'll expand our client base. And our third step would be to begin approaching larger institutional investors to invest with us. Our strategy is focused on building shareholder returns because the larger our fund is and the more mortgages we have in our portfolio, the greater the opportunity there is for us to increase our margins in the business and thus dividends for our investors. We'll also be able to reduce risk for the larger mortgage portfolio. At this point, I would like to introduce you to our team. We have 20 in-house mortgage brokers as part of Blue Pearl Mortgage Group. We cover BC, Alberta, Saskatchewan, Ontario, Manitoba in our brokerage business. Again, rare in our industry, our MIC only lends through our in-house team. That helps us guarantee the best quality deal flow. This is our most recent corporate picture here, all of our brokers in town. Our management team also has significant expertise in the sector. Hitesh, who you met earlier, has over 18 years of experience in the mortgage and banking industries. Donna brings over 18 years of investor relations, marketing communications, and corporate development experience. And our underwriters, Stephanie and Sarah, run our underwriting team, and they work closely with our brokers to find the best deals for the MIC. So we are currently accepting investors for the Blue Pearl Mortgage Investment Corporation. The minimum investment size is $25,000, and we have an offering memorandum, so the investment is open to non-accredited investors. If you want to learn more about the investment, or if you want to invest, we'll be sending a follow-up email to you. You can book a meeting with me in the link in that email. At this point, I want to thank everyone for watching this presentation. I will open the floor for any questions if there are any at this moment. So if you have any questions, feel free to enter them in the Q&A section. No questions at the moment, but I have received some questions previously. One of our questions were, how often are returns paid out to investors? The answer is returns are paid out monthly, providing regular income streams for our investors. However, there's also an option to direct reinvest into the investment, and that would lead to compounding monthly interest. Natasha, do you have any questions you typically get asked?
Yeah, I would say the normal questions are where do you lend? How do you determine what type of property you lend on? Um, and then the best way to describe my answer to that is I would only lend on properties that are easily marketable. And meaning like I won't pick acreage in Alder Grove that is very uniquely made or has a barn or something like that. I would pick a property that there's a neighborhood just up the street where all the houses are very similar and there's comparable sales on that property as recent as like 45 days out. So, and why I look at comparable sales is specifically, like we've said that haven't had foreclosure or any issues like that, but that's because we've already looked at the type of property we're lending on, and we're not lending on very unique type properties that are not marketable. In the event that I had to foreclose, um, uh, we would have plenty of opportunity regaining our investment or our loan. And so that's really what the whole idea is about the type of properties that we pick. So that's one of the questions that usually comes up for me. Um, the other one is the big one is like, okay, what happens if the Vancouver market like collapses, which is like a lingering question for like the last 2 decades, right? Or probably even longer. I'm not even sure exactly when, but I think you said it earlier about the 40% loan to value. And so I want to touch on that so people really know how important that is because most mortgage investment corporations will go up to a maximum of 75% loan to value. And if you don't understand loan to value, I'll give you a quick explanation. If a property is worth $1 million, we cannot lend more than 750,000. Lendable equity stops at 750,000. So most mix will go up to 75. Some of them are a little bit more conservative and they'll only go to 65. But generally speaking, 65 to 75. And that should give you enough room there from if the market was to correct itself, as they've been saying for last couple decades, even though it hasn't happened, but not saying it won't, but I'm just saying it hasn't happened. And so if the market does correct itself, it gives all of our mix and not all of the mix in Canada enough room to be able to weather that shortfall. And so nobody should really be underwater at that point. So why our 40% is so important? If a property was worth $1 million, we're currently lending on an average of at 400,000 at 40%. So there's so much opportunity there for us to correct any problem that comes in because we have so much equity available. So I think that's the other really important thing on that 40%. And so I wanted to touch on it to make sure that people understood really what that meant, right? So
Great. Thanks for the extra color on the on our risk management strategies there, Nitesh.
yeah.
We did get some questions coming in. A couple of them are focused on the tax implications. I'll just put that online right now. Betty Yee asked, what are the tax implications of investing in a MIC? And Paco Youssef asked, can you explain a little about the tax implication? Sure. So dividends from mortgage investment corporations are issued as again, non-eligible dividends, which means that they are taxed as interest or income in your annual tax return. That's why MICs like ours are able to be put into TFSAs, RSPs, RESPs, even RIFs or other type of registered accounts. And through those accounts, your taxes are either deferred or you're not going to get taxed if you put it through a TFSA. Another question is, what happens to my investment if I pass away? Again, with registered accounts, you have to set your beneficiaries or your survivorship conditions in your account, and you can work with that through us when you invest through Olympia Trust or with your bank as well. So basically, these will be how we treat these if in the event that you pass away would be a setting in your TFSA or registered account. Now, Paco has asked another question. If the decision is to reinvest in the dividends, the compound interests are recalculated every month. Yes, if you choose to drip direct reinvest the returns every month, yes, then in that case it will be compounding on a monthly basis. Lastly, what are the primary risks associated with investing in Blue Pearl? I have a general list of risks involved with all mix. Maybe Nitesh, if you want to add to that, feel
Sure.
free. You know, investing in mix involve risks such as borrower defaults, real estate market fluctuations, interest rate changes. However, as Nitesh has stated, we've managed that through our conservative loan to value ratios and rigorous underwriting processes. And you also have to keep in mind, I mean, having cascade of borrower defaults is something that has not happened in recent memory in Canada. And you really have to use your own guess to see what likelihood would be for the Canadian markets today. Tesh, do you have any other statements?
Yeah, I would say it's a good question because you want to understand that your money's well taken care of, your investment's taken care of. And I know there's certain things we can say or not say when it comes to what risks are, but for me, it's very simple, and let's just call it what it is. We're doing a mortgage on someone's property at a very conservative loan to value. We're measuring their ability to pay, and we're measuring what their payment history has been in the past. And so realistically, we're taking a calculated risk by the experience that we have in underwriting loans for individuals. And we've done this so well that we've been able to manage any defaults or foreclosures or anything like that. So I think from my explanation, I think you should feel comfortable knowing that the approach that we use to qualifying borrowers is very sound. Now, I will say that in our mortgage company, we do have borrowers that come through that we don't put through our MIC, our Mortgage Investment Corporation, because they don't meet the criteria of the type of individual that we will loan to. But that doesn't mean we don't do anything for those individuals. We still do loans for those individuals through other MICs that have appetites for clients like that. So there are other MICs in British Columbia, Canada, everywhere, all across Canada, that have risk appetites for different types of clients. Now, someone that has an appetite, or a mortgage investment corporation that has an appetite for risk, will have lawyers, they'll have collections teams, they'll have all of these things set up to handle that type of client. We don't have to worry about that because we're picking the ones that we want. And then I'll just go back to the tax questions earlier too. So first and foremost, anytime you have any type of tax question on this kind of stuff, I would say for sure check with your accountant what's the best opportunity, because we don't know what else you have in terms of investments and what type of income you earn and what tax rate you're at. So it's hard for us to give you the exact correct tax answer. But I think that, and if you don't have an accountant that can give you that kind of information, we can definitely put you in touch with one of ours that could give you some more information, or at least lead your accountant down the path of where to find the answers that you're looking for. But I would say that if taxation is a problem that you're having, we should definitely talk as well, because there are some different ways we can help with that too. We have associated companies that are tax specialists and strategists. So I think not talk about our MIC, but I'm just telling you there's other opportunities for us too, if someone has that type of question they want to talk about further.
Great. That's a lot. That's a great answer for the tax question as well. Now, we've answered most of the questions today. I'll leave it up for maybe another 20, 30 seconds. If there are any last minute questions, feel free to ask.
And then maybe I'll just fill the space here. So I just wanted to thank everybody that joined. And at Blue Pearl, we're doing innovative things, and we couldn't talk about all the things that we're working on today. But I welcome anybody that wants to come in for a visit to take a tour of the facility, and we'll be happy to show you what we're doing and explain to you how big the organization is and how we're moving forward with a bunch of different initiatives. And so we limited in time today, but I think that for me, one of the things that I always try to do is look at our funnel of how we view things. And one of the things that I'll say is that we always look at everything that we do client first. So the clients, imagine a upside down pyramid. The client is on top. Our sales team, which has direct communication with our client, is right below them. Then there's all of our support staff that support the sales team to do what they need to do for the clients. And then there's me on the bottom. And I'm just there to try to help find solutions. So I think that's the approach that we take to our clients, and that's the approach we take to our team. And so I think that we are able to provide the type of service we provide because we think that way. And we hope to have some relationship with you in the future.
Great. So that's a great send off for our webinar. Now, as promised, for our webinar attendees, we do have a little door prize for everyone for 5 folks who were lucky enough to get it today. Our first guest is Betty Yee. Our second guest is Jeffrey Sekundiak. Our third guest is Paco Youssef. Our fourth guest is Jason Chow. And lastly, we have Mr. Bain T. We have your email addresses, and we'll be contacting you through your email for these door prizes. And the door prize today will be a $100 gift card from Amazon. So thank you very much for everyone who showed up today at our event. This will be recorded and we'll release it on our social media. And we are always open for conversations. Feel free to reach out to myself or even to Tesh, and we'll have our contact information in the email following this webinar. Thank you very much.